Today is the 5th of November and a continuing update for sterling US dollar, and this is the next follow-on video that I'm going to release from the last video, which was the 18th. So although there are daily videos which are recorded across a number of currency pairs, these aren't always released, but this one on the 5th is a follow-on from the 18th, and there were some important points raised on the video of the 18th of October regarding this currency pair, which is still on YouTube. So if you're watching this video, it's also a good refresher to watch the 18th just prior to watching this video. But there was a number of points raised on the 18th, and one was that this if it was a 5-wave decline, this corrective structure here, let's just see where the 18th fell to there. This corrective structure was too small, and the expectation was we would have a couple more weeks of backing and forth for a B wave low and then for a C wave to the upside. Now that may have taken place. This could be labelled as an A, B, C, B, C, 2, and if we look at this on the weekly chart, that would be labelled as a 1A, B, C, 2. Now important point to remember is that this week, which closed on the 3rd of November, and the price high here, your oscillators, whether you're using RSI or stochastic or MACD or ADX or ADXR or anything else that you may use as a momentum study, they will be completely blind to the fact that the price for this week entered to this level here. Oscillators are a byproduct, remember, of closing prices, and they will only capture every time a weekly, daily or intraday chart actually closes, so bear that in mind. But this could be labelled irrespective as a 1, A, B, C, 2, and then the market has begun to decline to the downside. Now if we look at this decline, and it doesn't matter if you look at this in a 360-minute chart, or if you want to look at this in a 90-minute chart, or even if you want to look at this in a 720-minute chart, when you change time frame, remember, you do not change market position, you're just changing the perspective of which you're looking at it. So you are either going to look at more or less candlesticks or bar charts, in whatever your sort of preferred method of analysis is. And we can count a 1, 2, 3, 4 on a 720-minute chart, we can count 1, 2, 3, 4 on a 360-minute chart, and we can count 1, 2, 3, A, B, C, 4 on a 90-minute chart. And obviously the lower the time frame, the more detail that you will receive, or the more candlesticks or bar charts you will need to count. But this is potentially, at this particular junction in time, this could be labelled as a 1 ABC2 of potentially this, if you look at the monthly chart here, this very large decline which may last a number of months. Now at this moment in time, I don't know if this is the completion of minor wave 1 or minute wave 1 of minor wave 1, and there is no way to predict how far or how complex or how extended or how truncated this fifth wave may turn out to be. It's a case of updating this as the position and as the market unfolds to see where this fifth wave may actually take place and how this may end. So if I just bring that, so this is our wave 1, 2, 1, 2, 3, 4 and 5, followed by A, B, C, 4, and then we're in the process of this 1, 2, 3, 4 and 5. And there's a couple of targets at this moment in time for the fifth wave. One of those is where wave 5 would equal wave 1, but that would just be short of the channel, which is from wave 2 to wave 4, remember projected from wave 3. This could be a heavily extended fifth wave, because the third wave in this decline, which is exactly 161.8 of this first wave. So if you take a Fibonacci extension on a monthly chart and draw that down for wave 1, project that from wave 2, wave 3 is 161.8 of wave 1, which is a normal third wave. So with Brexit pending around the corner and all the waffle that's in the news regarding Brexit, you could see possibly a heavily extended fifth for sterling US dollar. You could also see a truncated fifth. As I mentioned, it remains completely unknown until the market's actually proceeded and we can count in a 5-wave sequence for a 5th wave. And I just want to share with you, a chart which I captured here, and it's just a little note to myself saying this short entry is very important here. And you can see up here actually, this was captured on the 9th of October this year, and the market did indeed come up and only just reached that 50%. Now a 50% retracement for a second wave is very shallow in my experience, and you would certainly look to see 61.8 or even 76.4. And remember, if we go back a couple of years to the start of the third wave, which is from, sorry, bear with me just for one moment, let's bring in the monthly chart from 2015, which is just this piece of price data here. That was nigh on 100% retracement for that second wave. So if this correction is complete at 50%, and that remains to be seen, this third wave may be underway, it may not. That, as I mentioned, remains to be seen. But if this is the case, it's a very shallow 50% retracement for a second wave. But this 1, 2, 3, 4 could continue down to a 5th wave and then a further correction. So on a weekly chart, that could be labelled as a 1, ABC 2, and then a further 1, 2. And that would be showing an extended or what would be labelled as a normal third, but maybe 161.8 of this first wave again to the downside. So we'll continue to watch an update. As I mentioned, this correction may or may not be over, but it's just interesting to see from the video which was on the 18th of October with the expectation for a couple of weeks of backing and forth with a B and then a C. That's taken place, and now the market looks to be building 1, 2, 3, 4. That would come down possibly with a 5th, and then an extension which may last a week or so, correction that may last a week or so, and then a continuation to the downside. As I mentioned, that remains to be seen, and it also remains to be seen if this is indeed complete. Corrections and impulse waves can extend in their complexity without warning. So this could go sideways for a couple more weeks, couple more months. We would have to just simply wait and see. So we'll continue to watch and see how the position unfolds.